Do you feel it? That creeping unease about your savings, your future, the very foundation of your financial security? What if I told you the stability you cling to is an illusion, a fragile construct teetering on the brink, and that history has already given us the chilling blueprint for its collapse? Your purchasing power, your retirement, the inheritance you hope to leave behind, all are at risk from a hidden truth unfolding right before our eyes. The financial elite, the central banks, the very governments we trust, are orchestrating a silent wealth transfer, a slow-motion confiscation of your hard-earned assets. They're doing it with a tool as old as civilization itself, the debasement of currency. But this isn't some abstract economic theory. This is a pattern so profound, so devastating, that it has brought down empires and shattered the prosperity of nations. And the most recent, most stark warning comes not from some ancient kingdom, but from a global power that once ruled the waves and dictated the terms of international finance: Great Britain, and the slow, agonizing demise of the pound sterling. History, my friends, does not repeat itself, but it certainly rhymes. And the rhyme of the pound is about to become the lament of the dollar. Let us journey back to a time when the British pound sterling was not merely a currency, but the undisputed bedrock of global commerce, the very definition of financial might. For centuries, from the sprawling empire upon which the sun never set, the pound stood supreme, backed by gold and the vast economic engine of Victorian and Edwardian Britain. It was the preferred medium of exchange, the global reserve currency, trusted and demanded across continents. But even titans fall, not with a sudden cataclysm, but with a series of insidious, often seemingly minor policy choices that accumulate into an unstoppable avalanche of decline. The seeds of the pound's demise were sown long before its final ignominious chapters. They were planted in the costly victories of 2 world wars, wars that, despite their triumph, bled the nation dry, transforming the world's greatest creditor into its greatest debtor. Britain emerged victorious, but financially crippled, owing vast sums to the United States. The Bretton Woods Agreement in 1944, though designed to bring stability, marked a pivotal shift. The US dollar, backed by the largest gold reserves, effectively dethroned the pound as the world's primary reserve currency. The pound was then pegged to the dollar, a subservient role it had never known. This was the beginning of the end of financial sovereignty, a critical stage in the long march towards irrelevance. But the illusion of strength persisted for a time. The real unraveling accelerated through the 1950s and 60s. Successive British governments, burdened by mounting war debt and an increasingly expensive welfare state, resorted to a familiar, dangerous tactic: simply spending more than they earned. Chronic trade deficits became the norm. To finance these deficits and prop up a struggling economy, the Bank of England, under political pressure, began to print. This isn't just about ink on paper, it's about the silent theft of value. Every new pound created without a commensurate increase in productive output dilutes the value of every existing pound. It is, in essence, a hidden tax on every citizen's savings. The geopolitical landscape further exacerbated the financial fragility. The Suez Crisis of 1956 stands as a stark monument to Britain's waning power and the pound's vulnerability. When the Anglo-French-Israeli invasion of Egypt ran afoul of American opposition, the US, wielding its new financial supremacy, threatened to dump its holdings of pound sterling and deny Britain access to an IMF loan. The pound plummeted, and Britain was forced into a humiliating retreat. It wasn't just a political defeat, it was a devastating financial humiliation that exposed the pound in its deep structural weaknesses and its reliance on external powers. This was a critical stage, a moment when the world clearly saw that the once mighty pound was no longer master of its own destiny. Throughout the 1960s, the economic woes compounded. A persistent balance of payments crisis, combined with stagnant economic growth and rising inflation, forced a significant devaluation of the pound in 1967, a desperate measure to make British exports cheaper and boost the economy. Yet this offered only temporary respite. The 1970s arrived, bringing with them a maelstrom of stagflation, a toxic combination of high inflation and high unemployment. Powerful trade unions demanded ever higher wages, fueling a wage price spiral, while oil shocks crippled industrial output. The government, rather than confront the underlying structural issues, continued to fund its commitments by borrowing and by the relentless expansion of the money supply. This was pure currency debasement by another name, eroding the purchasing power of every single Briton with ruthless efficiency. The nadir arrived in 1976. With the pound in freefall, inflation rampant, and the nation facing a complete financial meltdown, Britain was forced to go, cap in hand, to the International Monetary Fund for a bailout. This was an unprecedented national humiliation, a surrender of economic sovereignty, where the IMF dictated strict austerity measures in exchange for the loan. Imagine your nation, once the world's banker, now needing a loan from the global community subject to their terms. The once mighty pound was effectively on life support, its prestige shattered, its future tied to the whims of international creditors. Even after the IMF bailout, the pound continued its turbulent journey. It entered the European Exchange Rate Mechanism, ERM, in 1990, attempting to peg its value to other European currencies, particularly the Deutsche Mark. This was another ill-fated attempt to regain stability through external mechanisms. It lasted barely 2 years. On Black Wednesday, September 16, 1992, speculative attacks led by investors like George Soros overwhelmed the Bank of England. Despite spending billions of pounds trying to defend the currency peg, the bank was forced to withdraw from the ERM, allowing the pound to float freely. It was a crushing defeat, demonstrating the futility of trying to defy market forces when underlying economic fundamentals are weak. The pound, once synonymous with stability and strength, was now little more than a fluctuating instrument, subject to the whims of speculators and the persistent failures of its own domestic policies. The lesson is clear. When a nation repeatedly tries to spend its way out of trouble, to paper over structural deficiencies with freshly printed money, the market eventually calls its bluff, and the currency pays the ultimate price. Now, let us turn our gaze across the Atlantic, to the purported bastion of global finance, the United States dollar. Do you honestly believe America is somehow immune to these ancient, immutable economic laws? Do you think the pound's agonizing demise is merely a historical curiosity, irrelevant to your future? I tell you now, with every fiber of my being, that America is not merely facing similar challenges. America is currently standing at the exact same perilous stage that Britain did decades ago, only on a scale far, far grander. Consider the parallels. Britain, post-World War II, was burdened by immense war debt and the cost of maintaining a vast decaying empire. America today, we are saddled with a national debt spiraling past $34 trillion and projected to hit $50 trillion within the decade. We maintain a global military presence that dwarfs anything Britain ever conceived, effectively subsidizing the security of half the world. This is our imperial overstretch, a financial black hole draining resources that could be invested domestically. This is our post-war debt burden, only exponentially larger. A mountain of liabilities that can never be paid back through conventional means. Like Britain's expanding welfare state in the 60s and 70s, America has seen an explosion in unfunded liabilities. Social Security, Medicare, Medicaid. These are not mere line items, they are structural commitments that necessitate an ever-increasing supply of dollars. And how do we fund them? The same way Britain did, through debt and the relentless accelerating expansion of the money supply by the Federal Reserve. We have witnessed quantitative easing, a euphemism for printing trillions of dollars out of thin air, designed to prop up asset prices and paper over fundamental economic weaknesses. This is currency debasement in plain sight, far more aggressive and on a scale unimaginable even in the deepest recesses of the Bank of England as darkest hours. America is at stage 1970s, Britain right now, teetering on the precipice of a full-blown stagflationary crisis. We've seen persistent inflation, driven by monetary expansion and supply chain shocks, much like the oil shocks and wage spirals that plagued Britain. The Federal Reserve's clumsy attempts to combat inflation with interest rate hikes are crushing small businesses and exposing vulnerabilities in the financial system. Yet the underlying inflationary pressures from relentless government spending remain stubbornly high. They're playing whack-a-mole with a systemic problem. This is what we're not telling you. The de-dollarization movement isn't a conspiracy theory. It's a tangible, accelerating trend. Nations like China, Russia, and the BRICS bloc are actively seeking alternatives to the dollar, recognizing the weaponization of the US financial system. This mirrors the decline in global trust and demand for the pound after its debasement and geopolitical embarrassments like Suez. The world is looking for a new standard, and the dollar, like the pound before it, is losing its global mandate. My prediction, and this is not a prediction made lightly, is that between 2024 and 2027, we will witness the critical, irreversible stages of the dollar's fatal flaw manifesting. You will see an acceleration of inflation that will shock even the most hardened cynics. The official numbers will be manipulated, but your grocery bills, your energy costs, your housing payments, they will tell the real story of the dollar's diminishing purchasing power. Expect a major market correction, a seismic shift that goes beyond a mere recession. We are talking about a restructuring of wealth, where dollar-denominated assets, especially long-term bonds, will be annihilated in real terms. And when the financial system truly creaks under the weight of this debt, when the debasement can no longer be masked, look for the government to resort to increasingly authoritarian measures. This could include capital controls, limits on withdrawals, and even the insidious march towards a central bank digital currency, and a CBDC, a programmable digital dollar that would give the state unprecedented control over your spending, your savings, and potentially your very freedom. This isn't just about economic policy. It's about the fundamental structure of your financial liberty. They will sell it as convenience, as stability, but it is the ultimate tool for confiscation and control. The gravity of this situation cannot be overstated. We are not talking about a minor market correction or a temporary blip. We are discussing a fundamental reordering of the global financial landscape, a paradigm shift where the dollar, like the pound before it, will lose its reserve currency status, and with it, the exceptional privilege America has enjoyed for decades.